Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another daily cryptocurrency market update. There is a lot going on today, not just in regards to the cryptocurrency market, but in regards to the kind of world of central banking, economics, so on and so forth. And of course, with the close of June, we see the end of the second quarter, and there's likely going to be option expirations, contract expirations, and a number of other things that could cause some volatility. So we'll look at that in regards to being crypto specific. They reckon there's quite a few billion in terms of contracts that are set to expire. And some of these, depending on where Bitcoin closes the month, depends on what side a lot of these contracts are on in regards to being in losses or profits, and potentially may dictate where they position going into the next quarter. But we'll talk about all that. We'll obviously, first of all, look at the charts. Then we're going to be talking about the $27 trillion that asset management institutions hold that have now all looked to file and enter the crypto space. We'll talk about Max Kieser now banging on about a $220,000 Bitcoin by July, which I personally don't think is going to happen. And of course, his reasons for it are indeed all these asset managers getting involved. But you got to remember, with these asset managers, really what we're banking on is not that $27 trillion, which is the total sum of assets that these guys have under management, flows into Bitcoin, but just a fraction of it. And this is just one place where we ultimately think money is going to flow into the crypto space from. There's going to be a whole range of others. I actually think central banks one day will end up holding crypto. But that is just my opinions, neither by the by. We also have Fidelity, a $4.5 trillion asset manager now filing for a spot ETF. And then we're going to be talking about the central banking world and actually how we've seen $700 billion increased in the national debt in the past 3 weeks since the debt ceiling was raised. Just to put that into perspective, guys, that is way more than the US stimulated during the 2008-2009 financial crisis. We're living in a joke world. Bitcoin should be 100,000 by now. Gold and silver and other assets that are outside of this system and the whole value should be significantly higher. But there's a degree of depression there from banks, from a wide range of institutions. Certainly, if you look at gold and silver as a case study. But we will talk about that. We'll look at the ECB's comments. Let's start off, as always, with the charts. And today, guys, we have a policy panel of Andrew Bailey, who, of course, is the governor of the Bank of England, Christine Lagarde, who's the president of the European Central Bank, Jerome Powell, who is the chair and board of governors of the Federal Reserve System, and Kazuo Ueda, who is the governor of the Bank of Japan, all meeting and talking. I think this has a little bit to do with why the markets are somewhat sheepish today. And also, I think as well, going into the end of the quarter, you're going to see people pulling back and seeing where the end of Q2 finishes, and then looking likely in July, which could be a very positive for the crypto space to get positioned again. I would say in the long side, looking for continuation. Certainly in regards to contracts and quarterly contracts, monthly contracts, so on and so forth. But from a technical point of view, you guys know that we are very, very happy with the structure that Bitcoin's put in. We have looked at altcoins, and I did a pretty good update for the Patreon members where we looked at some altcoins in the weekly meeting generally across the board. You're getting divergences everywhere, bullish divergences everywhere with altcoins. Barring a few, Algorand is one that looks pretty crappy from a chart point of view, but many of your altcoins actually look pretty good here, whilst we've got the backdrop of Bitcoin doing well and set to continue to do well, stock market doing well and set to continue to do well, and so on and so forth. So Bitcoin to me looks very strong. You're at your 30k resistance level. Ultimately, we do envision that this is going to get taken. You're not really at any kind of key levels here, but isn't it interesting that the kind of targets that we do have for Bitcoin, from the bull flag, from the right shoulder, the inverse head and shoulders, do take you into the 0.5 ratio for the retracement. And this, I think, is very, very probable that Bitcoin is heading this year to 43,000, 41,000, and ultimately has quite a bit of potential of overperforming technically Bitcoin has played out beautifully and exactly as followed. I see lots of people sort of claiming victory over calling 25k bounce. Well, this was a kind of path that we had set out for it for a long time. This was a nice bull flag. And ultimately, isn't it interesting how technical levels do play out? And we had a fundamental narrative that always accompanies the technicals. And actually, the propellant up here could largely be due to a winning of a spot ETF being given to one of the institutions. I think here you've got SEC may approve BlackRock ETF before losing court case to Grayscale. We know that Grayscale, who have GBTC, which has been doing sensationally, because ultimately with GBTC, you have a discount. So GBTC does represent the spot Bitcoin, but it's not fixed to the spot Bitcoin like a spot ETF would be. It can move on its own, and it's been at a discount. This discount window has been closed because if they do get awarded the rights to an ETF, then you will not only the Grayscale Bitcoin Trust would be backed one-to-one with Bitcoin, and the discount would get closed. So there's an arbitrage trade there that we have actually spoken about on the channel. But it's very interesting everything that's going on. Breaking $4.5 trillion. Fidelity is filing for a spot Bitcoin ETF. Here you've got Max Kieser, 22 or 220,000 could happen in July. Please, Max Kieser, just like many of them are not individuals who I think you should take that seriously when they call for things like this. It's all about like lots of media and Twitter eyes basically, and people viewing things and a shock factor. So this was very interesting. $27 trillion is coming to Bitcoin. No, it's not. $27.2 trillion is under management of a number of seven of these institutions that ultimately have filed for Bitcoin spot ETFs. Now, that's a lot of money, but Bitcoin only needs a few percent of that to do well. And the more interesting thing for me than what these asset managers have under asset management is what's going to happen when they actually have a registered way to promote and sell Bitcoin, and they'll start pushing it as a diversifier of a portfolio. This is where Bitcoin is heading at what's Bitcoin, 500 billion, something like that. Let's see if we can find BTC market cap. So this is Bitcoin's market cap. Yeah, so 600 billion. This is a $3-6 trillion asset class. Altcoin, you'll see altcoins get to $1 trillion. Ethereum took a bloody valiant effort at it last bull run. And really what you're banking on with these is that they start offering it as a kind of portfolio diversifier and some money flows into it, not 27 trillion. That will not happen. But I'm without a doubt that quite a bit of money will flow into Bitcoin. And this is why Bitcoin's really been leading. Bitcoin dominance has been doing very, very well, and looks like it's going to continue to do so. Got another double bottom formation here. Ultimately, this could give you upside. But you will have your alt season. We saw in Hong Kong yesterday that actually lots of alts were getting mentioned, and not only mentioned, but mentioned in a positive light. And it wasn't just Bitcoin, but it was also Ethereum that they were looking to facilitate the trading of. We know the SEC's tyrannical regime has hit altcoins pretty hard. It's why some of them ended up going back to January's lows, but ultimately still think now is a great time to be an accumulator. Crypto volatility, options, expirations create perfect storm. Everyone's got their take on it. Billions of dollars in options contracts are going to expire this week, and the recent rally has caught short sellers off guard. So they estimate that there's around about $4.5 billion set to expire on Friday, and also in Bitcoin contracts, and also $2.3 billion in Ethereum contracts. It's going to be very interesting, certainly in regards to where things close. You'll have had lots of short sellers that are going to be feeling the pain here. This is why, and one reason Bitcoin's moved in this kind of manner is because of short squeezes. Very interesting, because if you hold 30k, it's my opinion that those options will open. You'll get a lot more calls than you get puts. So you'll get a lot more longs than you'll get shorts in regards to the option market. And that's likely going to fuel quite a bit of upside for Bitcoin. You know, you'll have expirations. What do people do with that cash? Well, typically they'll move on to the next contract and they'll open more contracts. And depending on how they do that, you know, if it's the futures side of things, then of course that isn't backed by Bitcoin. But with a spot Bitcoin ETF, all of that changes. So there's lots of interesting things taking place. Again, today we've got a lot of governors and central banks speaking. This is why the stock market futures are marginally down. Bitcoin's marginally down. The altcoins, of course, are altcoins. However, the stock market had a pretty good day yesterday. We've been so right on the stock market. We've been extremely right on a number of markets. You know, we did say Coinbase was actually a good buy back here. And ultimately, I do think, you know, this is a basing sort of structure for Coinbase. Coinbase is going to do very well. It's going to be one of the global leaders in terms of crypto as an exchange and ultimately do well as this industry grows, which we think it will. Dixie getting a little bit of a bid here, likely on the kind of context that the central banks are going to come out and continue to be very hawkish because they have to be. The central banks, the best analogy I can give for a central banker like Jerome Powell, Christine Lagarde, is they are the parent talking to a child and they see you as children, right? And they are trying to say things to get you to do what they want and to coerce and caress the markets into part of monetary policy is their vocal communication. And, you know, they aren't going to come out dovish, particularly in the kind of inflationary environment that we have. You know, inflation is 4% in the US. It's a lot higher in Europe and the UK, of course. So they're likely going to have to continue to talk the tough talk. But I think they're absolutely full of shit. And I think the markets also think that they're full of shit. This was very interesting. There is a new $700 billion increase in the US national debt since the debt ceiling was suspended 3 weeks ago. That's a lot of money, and it's becoming a joke world, to be quite honest with you. It's just a complete joke because ultimately, in the .com, sorry, not the .com, in the 2008 financial crisis, in the US, UK was significantly less, but US, there's estimates between 400 billion, 220 billion, all the way up to, you know, 500-600 billion. They reckon was the cost of that financial crisis. Today, we live in a world where they up US debt alone by 700 billion. It's insane. Bitcoin should be a lot higher than it already is. So should pretty much anything that is outside of the monetary system, because it's a snowball that is at that much, that's that big at this point, that every time it turns over and rolls, the mass that accumulates around it is just insane. And there's one end for this. You know, eventually that snowball runs into a wall and you know, it's not a very pretty picture. We're just moving into a complete joke world, and you've got to understand, the more money they put out, the more debt they issue, which we live in a debt-based system, the more your store of value, which your government has mandated that you use and you get paid and you pay your pensions in and you blah, the more that gets devalued. And this is the great game and the great controller. This is why I think it was it Jacob Rothschild or was it Mayer Rothschild said, I don't give a damn who the president of a country is, just give me controls of the central banks. Because you ultimately become the ruler of money and thus the ruler of the people that use that money. And everybody uses fiat. We don't have alternatives. And this is why they fought so zealously to make sure that there wasn't any alternatives. And this is why Bitcoin's very interesting on a number of levels, socially, technologically, and a number of others. So this is insane. You have also the ECB chief economist warns markets against pricing in rate cuts within the next 2 years. So is this going to continue? Think about this debt and the annual payments that have to be made on this debt. It's almost quantitative easing without, in the name of quantitative tightening. You've got to remember, the Fed is still rolling off their balance sheet, but it's basically null and void at this point. There's a number of ways you can look at liquidity. We looked at Gareth Soloway's comments about the M2. And M2 is a great way to look at liquidity. Generally, money supply down, typically markets will follow, and vice versa. Money supply up, typically markets follow that general trend. But there are a number of ways to, and isn't this interesting? This upticked as well, and so did your stock market. Look at the stock market. Look at how correlated these are. This is a combination of the Fed balance sheet, the Treasury, and a number of other things. This is one way of looking at liquidity. I've not seen anybody use this chart because we've actually added a number of different. Maybe we should do a whole analysis on just this chart alone. We've added a number of different kind of mechanisms that we think, or a number of different charts that show liquidity together to get this. And look how correlated these are, guys. So do we continue to see this uptick? We will see. It's a complete joke world that we're living in. On that note, we really think that crypto is going to do exceptionally well as a result of it, as it challenges the system. It's very likely to me today that under the pretext of who's talking, the central bankers, and what they're going to say, that markets are kind of, and coming to the end of the quarter, markets are kind of, let us see what happens. And then I actually think July is going to be a fantastic month. I'm very interested to see how the stock market opens. Some cryptos are doing sensationally. Some that we bought recently with the Patreon members actually were up, significantly yesterday. We're now getting back to the green in regards to our positioning. We've not really took any losses this year. And certainly as in regards to where we're positioned, we're very, very happy and still very much stand by January's call that the bottom is pretty much in. We've always said that we were never going to perfectly time the bottom. People want absolutes. And it's very interesting when I see comments about these absolutes because it's revealing to the person writing the comment, for somebody who knows about markets, who's traded markets for a living, who's invested in markets and been around markets for a long time, it really shows a lack of understanding with how being a technical analyzer, being an investor actually works in the real world, not this fantasy world that Twitter has sold you and YouTube has sold you about being able to get everything right. That is simply a fallacy. And on this channel, you get nothing but the truth, and we try and do our best, and we hope that you enjoy the content. So on that note, guys, I'm going to love and leave you. Lots and lots of things taking place. It's a very interesting and exciting time to be in the crypto space, and please do not look that gift horse in the mouth. Again, today we've got central bankers speaking. Markets always, is Jerome Powell going to come and say something ridiculous today? Like, we're going to skip rates, but we're going to do one in July instead of doing one in June. What is the benefit or purpose of that? If you wanted to get the job done, you would have upped rates. If you have no intention of upping rates, you wouldn't have upped rates. Look at what they do, not what they say. Again, the market, the central bankers are the adult, or they think they're the adult in the room, talking to the child, which is the market, and you as retail participants to coerce them down. Right now, we have a 79% chance, according to the Fed Watch, of them doing another rate hike in July. 26th, I think it is. Why would you skip a month? What, are you going to do intimately or intermediately? It doesn't make much sense. But anyway, we'll keep you up to date with it all on this channel. Lots of exciting things happening, guys. There's never been such a good time to be in the crypto space. We are on the precipice of becoming a recognized asset class. And I'm so happy to be on this journey with each and every one of you. Shout out to everyone in the comment section, leaving me support, leaving me comments. I notice you, I see you, and it's absolutely appreciated and loved. It means the world to me. And this channel is here for you guys. Any suggestions, comments, feedback, please do leave it in the comments. On that note, I'm going to love and leave you because we're rambling now. Have a wonderful Wednesday, guys. See you in the next one.